All right, everybody. So like I said, I want to go through this trade on Euro JPY just because I think, like Dennis and Josh pointed out, there's a little bit of indecision in the grading of the trade. I want to show you how I graded it so you can understand where I saw probabilities. First, I'll show you the P&L. You can see I was in at 131.39. This is all one entry position, as I said before. My best exit was at 131.32. It didn't move a lot as far as distance in pips, but my stop here was only about 7 pips. So I was only going for 14, 15 pips on the thing. However, we found a lot of support at yesterday's low, and it since has bounced off that level. And that's why you can see I got stopped out on the rest of the position in profit. I was still stopped in profit, so it's a very small win, which typically aligns with how C setups turn out. I graded this trade a B setup, however, for a couple of important reasons. First, you're going to see there's a lot of notes here, right? If you don't speak the ASFX language because you haven't taken the courses, some of this stuff might not make sense to you, so I'm going to try to go through the whole thing. First, before we can look at the 15-minute, now that you saw the P&L, look at the 1 hour. This is yesterday at 5 a.m. This is what kind of set the bias for me. It's been short bias since Monday, but yesterday at Tuesday, we had an A1 entry present off the 21 EMA at 5 a.m. And since then, it's moved about 1.6 R. So coming into today, naturally, I'm still going to be short biased. The higher time frames, the 4 hour and the daily, they are also short biased. So it feeds that whole idea. Then coming in today, let's move this out of the way. Coming in today, you can see from yesterday, we have some bullish divergence. You have to start at yesterday's RSI low, which is back here at 22.15, connect it to the price action low here, and that'll show you price falling while the RSI, if you blow it up, is rising. Okay? So that bullish divergence has to be drawn and has to be taken into account. Then you want to make sure you draw the zone at yesterday's low. We're going to use this pin because it's got the 2 candle rule applied to it, and it's the body low of the day. The 2 candles to the right and the 2 candles to the left are not lower, so this is our sensitivity zone. This is the zone that we would want, ideally, we would want it to break and get below before we look for shorts, because any type of short that we would take into that zone, it could bounce off that zone as it is now and come higher. That's what it did last night. So you wouldn't want to forecast a break of that zone. However, we got an A1 entry signal this morning at 6:15. I waited for a 1-minute pullback, which is something we discussed in our D1 deep dive last weekend, to get me a little bit better of risk reward, but I still took the entry following the A1 system. If you took the A1 candle formation, you would have been in a little bit lower than me. And as you can see, it really just chops sideways from the moment you took the position until the moment it comes up towards the stop loss. However, EMAs are great for a downtrend. Market sentiment is very bearish today. It's perfect. And there's no bullish divergence today. The bullish divergence is present the day before. So yes, it's present, but it's not in the way of good risk reward. The line connects way down here. If this divergence line for some reason had been like this, I never would have taken the trade. That would be a C setup to me. But when the divergence is connected back here because of this price action point here, the body that we connected to, you can see the divergence line is not in your way of good risk reward. We could get good risk reward just to ADR, which is this green horizontal line, and that would have been over 2R. So it would have made sense to still be in this trade no matter whether you took the A1 here at 6:15 or if you got the pullback to the 8 EMA on the 1 minute like I did and like James did. Either way, it's still on edge. RSI value is proper. Market sentiment is proper. Good risk reward to ADR. Nothing in your way except the zone that you are in. And to me, it's not necessarily that it's in the way. It's just a sensitivity zone. We know it could come through and follow trend from yesterday, from the higher time frames, from market sentiment, but we also know it could bounce just like it did overnight at 430, 445. So if you decide every time you see divergence, you're going to knock the grade and go from a B setup to a C setup, that's fine. But for me, even though I have 2 knocks here, the yesterday's low zone and the divergence, I still thought it was a B setup because I had good risk reward and I'm trading in full trend. All of that being said, and this is why Dennis brought it up and why everybody brought it up, all of that being said, if you look at my 1 minute from where I took the position and everything like that, you'll see, because my 1 minute entry is like right here, my stop loss was here at the most recent lower high from the top. Very simple structure. You can read it in my notes, right? Here's where the 2 candle formation closes. Market sentiment goes bearish. It pulls back to the 50. Market sentiment still bearish. That's where I took the position, just like the D1 and A1 combination tells us we can do. I'm using the most recent lower high as the stop loss. And once it moved about 1R, market sentiment was still bearish, but I could see it slowing down. And I knew that if I didn't lock my stop and I got stopped out of this trade at full stop loss, Looking at the 15-minute chart, I would say to myself, oh, why did I anticipate it breaking for a new low of day and out of the zone from yesterday's low? I should have been more conservative. I should have locked my stop sooner. So while I graded it a B setup, after watching the trade and not getting the kind of momentum that I like, where it's just falling for you, and I starting to, see market sentiment turn up, that's where I said, all right, let me take some off as if it was a C setup and lock my stop just like it was a C setup. And that ended up being what put me profitable today versus break even or at a small loss. So yes, it's not a big winner, but by waiting for good risk reward, by staying patient, and then by being conservative, I was able to lock the stop and still be profitable, as you could see from the P&L. And the big takeaway out of all of it, whether you graded a B or you graded a C, during this NFP week, where we have the non-farm payroll news coming up on Friday, it's super important to be more conservative if you're trading ASFX systems. If you're not trading what we trade at ASFX, what we teach in the courses, I don't really care what you do. I don't know what you're doing. I know a lot of people try to trade into NFP, and it's never worked for me in 6 years. My back testing tells me that this week is choppy. So if it's a choppy week, even with good setups, why would I stretch myself? Why would I put myself at risk of taking an unnecessary loss? Even a small loss to me is worse than a small win. I'd always rather win and just come back for the next trade. See if it sets me up for another trade as the morning goes on. Now, this comes today as this BC setup. After yesterday, we had better trades. We had a great trade on GBP USD that James and Jerome did. We had a great trade on USD CHF. Both of those were A or B setups. They were good trades. I hesitated yesterday. So my takeaway from yesterday, since I didn't take any of the positions, was, okay, when I see a good signal the rest of the week, Wednesday, Thursday, Friday, even if it's just before NFP, I will take the signal, and of course not trade into the news, but I will take the signal Wednesday or Thursday, no matter what. As long as it's graded proper, if it's a B setup or an A setup, I'm taking it. Now again, today you could have graded it a C, but I justified why I graded it a B, and I think my justification makes sense. With that divergence line not being in your way, it's not a C setup to me. So that's why I was almost like not aggressive, but emotional about taking the position. The candle formation presented, the RSI value was proper. It was a good trade that would need to go into my back testing no matter what, A, B, or C. So I wanted to be in the trade just to show that I'm not hesitating today like I did yesterday. So that's kind of the full thought, using the higher time frames to bring Euro JPY down into reality on the 15-minute, and then turning that bias into a short-term day trade, and then being able to lock my stop quickly because I'm grading it appropriately. Whether it's a B or C setup, once it starts to slow down, why would you not lock your stop? Why? You can get back in, take the win and get back in if you get a better signal. And if it doesn't give you a better signal, there's a reason that you should be out of it. It's not going in your direction. So that's my full thoughts on Euro JPY. Let me know if you guys have any questions in the comments, okay? Sam, you're spot on, bro. You're a sharp guy, bro. I'm glad that you're working with us. Sam said, I bet if the trade went 4R, no one would have questioned it. Facts, bro. Facts. Because there are examples in our markups that'll show it, of course, trading at that zone from yesterday's low, but it'll go right through it because it's trading in trend, But that's why locking the stop to me was the smarter thing to do, no matter what. So now, let me just pull up my little folder here and go like this. Go to my June markups. I want to make sure I got good pictures of this. Yep. Trade's done there. Trade's done there. Okay. So I'm going to remove this now that we went over that. I'm going to remove this, take this off, and now we're going to be just looking at that as the entry marked right there. Take this off, take this off, take this off. Take off the stop loss. Okay. Yep, you said it well, Brogan. Yep, love that, bro. Always winning if you're learning. Okay, let's go look at Euro USD and see what's going on for Kareem here. So this is a decent looking 2-candle formation, but into the news right now. And again, this comes after, this is that C setup yesterday that we avoided. That ended up being a big winner, 3R yesterday on that C setup. And this was into divergence, into the low from the previous day. Look, literally this is the same trade, basically. Now this one had divergence in its way, which is why I didn't take this one. And this one ended up being a winner. Because this one, if you look at the divergence from the RSI low yesterday into today, well, it was yesterday into today's RSI low at that point before it moves lower. Look, this is actually the setup that I'm saying you would want to avoid as a C setup, and it ends up being a winner. But then the better trade on Euro JPY today ended up being a slow stop out. I'm sending this to Dennis right now. Now it's turning down a little bit, which is in alignment with the news. You'd expect this to move lower, I think, with the news.